Very complicated.
1031 tax deferred exchange involves income property, your investment property. Let's say somebody said, you know, I have a rental I want to sell. What is your next question? I have a rental property, I bought it a long time ago, it's free and clear. I think I'm going to sell that. What is your question?
Maybe we can try another one?
Yeah.
Yeah. Do you want to do the 1031 tax deferred exchange? What is that, right? Because if you paid $100,000 for the house, and you're selling it for $300,000, minus all the closing costs and whatnot, let's say it costs 8% at $24,000, then your actually net sales price is $276,000. So you made $176,000. If you do not do the 1031 tax deferred exchange, you're going to pay 25% on capital gains. So you ask them, do you plan to do 1031 tax deferred exchange, which means they're not going to pay tax at this moment.
Mm-hmm.
Now, you can sell a residential, that's a real property, right? You can buy any real property as long as it's an investment property, which means you can sell 5 houses to buy a building, or you can sell one building and get 40 acres of vacant land, as long as then a like property, which is real property. Of course, you're gonna get an accommodator in the middle. So if you sold this house, let's say today, 11/14/11, you have 45 days to name properties that you are going to exchange it to. If you don't do that, you lose it. If you backdate it to make 45 days, federal crime. 45 days. You got to name it through the accommodator. You got 180 days from the close of escrow to close this house, or you lose it. Because, let's say, when you identify a property, you do more than one because. Suppose that seller decide not to sell for whatever reason. Or he decide to sell it to maybe there were another offer on the property, or the listing agent play the games on you. You want to name 3 properties, you can name up to 3 properties. So you buy one of the 3. If you don't buy one of the 3, because another home came on the market at below market price, you jump to that one, you do not qualify. You can change it as long as it's within 45 days.
Mm-hmm.
Otherwise you lose it. The property you're gonna buy has to be, if you sold this one for $300,000 minus closing costs $24,000, your net sales price $276,000. It has to be equal or higher than that amount. Let's say if there was an underlying loan for $187,000, the loan amount has to be $187,000 or higher. It cannot be you sell the $300,000, you pay $500,000 for the next purchase and pay cash for it. Okay? You can have a $187,000 loan and bring the balance in cash, but it cannot be lower than that amount. So there are certain limitations what we can or cannot do.
So they can get a loan for the $187,000, and after it closes escrow, pay the loan off.
That's correct.
And that's fine.
Years ago, I used to live in Hawaii. I had a house in Hawaii, too far, and Hawaii. My roof was starting to leak. If you could take a shower in the house, so I thought, I'll sell it. So I sold it. But remember, when you sell it, you end up with a $276,000 check. You cannot touch that money. You can. The money you touch is called the boot, and you pay tax on that. So the way I fixed it was, I sold the house. I ended up with about $250,000 in cash. I bought 2 houses. No, 150. Oh, I wishful thinking. What I did was, since if I touched a dime of it, I was going to get taxed. So I bought one for $130,000. I paid cash for that one. The other, it was $130 and $110 or something, years ago. I got $20,000 left, and it must have been about $100,000 home. I used that as a down payment and bought 2 houses. I wanted to, it was the beginning of my career. I needed some of that money, so once I closed escrow, I went in and refied it and got money out. You want to do it that way instead of, oh, I got a big check, I'm going to go shopping. Doesn't work. You can, it's your money, but it'll be taxed, okay? Without confusing yourself, learn a lot, but those are the time frames that's critical. 45 days from the close of escrow of the property you're selling to name 3 properties you're going to be buying. And then those gotta close. If they are doing the exchange, don't write an offer on a show sale, ain't gonna go down. Don't do it on a brand new construction because it was supposed to be ready in 2 months, 6 months later. Didn't have an occupancy permit from the city. House was ready, but at the last minute, the city wanted them to do something else and couldn't get an occupancy permit.